Everyone thinks that the Federal Reserve cutting interest rates is going to help the housing market. Buyers think it's going to make the market more affordable for them, and sellers think it's going to bring more buyers into their home and potentially bid their price up or at least find a buyer for their property. But that's simply not going to happen. In fact, the mortgage rates actually increased after the Federal Reserve cut their rate, not decreased. And we'll talk about that in further depth later on in this video. But first, let's talk about where the housing market is so we can have an understanding of what's going on and what's likely to take place in the future and how the Federal Reserve's actions are likely to impact the housing market in one way or another. So right now, inventory is at the highest levels that we've seen since about 2020. There's more homes on the market than 2021, 2022, 2023. There's more inventory out there. Buyers have more options. With that more inventory, days on market has increased. Fewer homes are selling for over list price. On average, homes are selling for under list price. So overall, the housing market is much slower than it has been the past few years. Now, at the same time, median sales price is not crashing. And this is what I predicted at the beginning of this year. I did not think we would see a crash in home prices across the country. Now, certain markets are getting hit harder than others, and we'll talk about that in this video as well. But overall, on a whole, the median sales price in the United States is up 2% year over year. And that's despite homes selling for under list price. And now what's going on is sellers are listing their homes for a little bit higher than they were last year, probably because some of their comparable properties got bid up to over where their market value is. And so sellers are listing their homes for higher for that, most recent sales price, or maybe even a little bit above that. And then they're negotiating down, they're cutting their price, or they're accepting an offer that's a little bit under list price. And so even with those negotiations, on average, the sales price is going up in the United States. Now, let's jump over into some data here so we can learn more about what's going on in the housing market and talk about what happened to mortgage rates, that increase that we saw after the Federal Reserve cut their interest rates. Real quick, my name is Liam O'Reilly. I'm a realtor here in Vermont with Jerry Riley Real Estate. I help home buyers and sellers every single day. So I'm really in the weeds with this. If you have any real estate needs, all my contact information is in the description. Reach out to me directly. I would be happy to help you. So let's jump over into the data. Okay, the first article that we're going to take a look at is out of Fast Company. And what they're talking about is where the state of the housing market is, and they break it down by market, which I think is very useful to look at. So this first section talks about the overall US housing market. And the link for this will be in the description. So if you want to fact check me, if you want to look at this yourself, feel free to take a look at that link. But you can see here, where we were in 2021 and 2022 was this strong seller's market that we can see here. In 2022, we dipped off into a seller's market last year. And now we are in what's called a neutral market, at least on average across the country. This means that neither home buyers nor home sellers have the advantage. There's roughly a balanced market between the amount of buyers out there and the amount of homes for those buyers to purchase. There's a healthy amount of inventory. There's a healthy days on market compared to what we saw in years past. Now, when we break this down by the different markets across the country, you can see that things really change drastically based on where you're looking to buy or sell your property. So we see in the East Coast here, in New York, in Boston, in New Hampshire, the heat index, this 70 or higher, is signaling that it's a strong seller's market. New York City right now is a strong seller's market, meaning that there's more people who want to purchase property in New York City than there are sellers who want to sell their homes. So other markets compared to, Florida here, Miami, Florida, is a relatively strong buyer's market, or it's in this middle portion. So it's a buyer's market. It's not a super strong buyer's market, but it is a buyer's market nonetheless. And you can see, and in the middle of the country, in Colorado, in Texas, in some of these southern states, Missouri, Georgia, Arkansas, we see it's more of a buyer's market compared to a seller's market like we see in the Northeast or some parts of California. Now, when we take a look here, the hottest markets, Rochester, New York. So if you're shopping in Rochester, New York, you're probably feeling pretty competitive right now. If you're a home buyer out there, things are probably very competitive for you. If you're a home seller out there, you're probably not worried about your home sitting on the market for too long. The index is at 153, which is almost double the threshold of this 70 mark that they use to see if it's a buyer's or a seller's market. Now, in contrast here, we see that Jackson, Tennessee is just an 8. So overall, things are pretty slow in Jackson, Tennessee. That's a very strong buyer's market. That's likely an area where inventory well exceeds demand and likely a place where we're seeing home prices come down. Now, when we average all of these markets out compared to the hot markets and the cold markets, that's where we end up in this neutral market here. We're closer to a seller's market than we are a buyer's market on average across the country. But you can see that depending on where you're shopping, things are very different. Now, when we jump over to Redfin's data and take a look at what's going on across the country, we see that new listings are up 1.1%. So more sellers are listing their property than they were last year, but that the pace of increase over the previous year is slowing. So new listings are up just 1.1%, marking the third straight month they have increased or decreased by about 1% or less. The total listings are up 9.9%. So there's 10% more inventory on the market this year than there were last year. And that's the smallest increase since March of 2024. So inventory has been building over the past few years, and it's still building compared to last year, but the rate at which inventory is increasing on a year-over-year basis is declining. I think what's going on personally is that sellers are realizing that it's a harder time to sell their home compared to years past. And certain sellers are deciding not to list their home to delay selling their property in the hopes that interest rates will fall. But we just talked about it on this video. The Fed just cut their rates and mortgage rates did not fall. So when we take a look at the mortgage rate mark, we see here, the Fed cut their rates on September 16th. And if you look at the bottom here, September 16th is the low point. That's right when they cut their rates. And they cut their rates in the afternoon. Shortly after they officially cut their rate, we saw mortgage rates increase. They hit this bottom and they bounced up. And now we're slightly higher than where we were before. Now we're still lower than we were in previous months, but things jumped slightly once the Federal Reserve cut their rate. And the reason why they did is because they set expectations that they're going to be more cautious with rate cuts moving into the future. They're not jumping towards drastic rate cuts in the coming months. They're going to be data dependent. They're going to see what the data says, see how the economy is holding up, see what's going on with inflation, and then make their decision. And now the market leading up to this rate cut was expecting the Federal Reserve to be much more dovish. They were expecting the Federal Reserve to say, look, the economy's not in a great place. We're going to cut 25 basis points today, and we're going to cut 3 times, 4 times before the end of 2025. What they said is they're going to cut today, and they're going to cut most likely 2 more times, but we'll see. They may not cut 2 more times. This may be the only cut of 2025, and that's what the market is responding to. Now, as we get more data, as more jobs data comes out, as more CPI data, inflation data comes out, that's going to dictate what the Federal Reserve will do with their Fed funds rate. And that news, the news on the economy, is going to impact mortgage rate more than the actual cut of rates. The Federal Reserve, they project what they're going to do before they actually do it. And that's when you see mortgage rates drop. So we saw this low right when the Federal Reserve cut rates, and even the week ahead of when the Federal Reserve cut rates, mortgage rates were lower than they are today after they cut rates, because the market trades on the news. They don't trade on exactly what the Federal Reserve is doing. And after the Federal Reserve came out and said that they're going to be more cautious with rate cuts, mortgage rates increased. Now, moving back to what's going on in the overall housing market, this is what I think will happen as well. So there's a lot of buyers who are sitting on the sidelines right now who are waiting for rates to fall because they think that will be a better time to buy. Personally, I know there's a lot of people out there that are saying the housing market is crashing. And we can see from this map that some markets are in a buyer's market and some markets may be crashing. But overall, on a whole, nationally, prices are up 2%. We take a look at median sales price, this first chart here, median sales price up 2.2% this year on a national basis. So my point here is that even though rates are up, even though there's YouTubers and articles and people telling you that home prices are going to crash, I think that this is the crash. We're seeing a crash in certain parts of the United States. We're not seeing a crash everywhere. We're seeing median sales price increase by 2%, which is basically flat. They're not really going up much. Prices aren't going up much. They're not decreasing by much. Now, certain markets are going to interact different than others. But this is the crash. This is the crash that people have been talking about. What we're likely to see is we're likely to see rates come down compared to prices. And that's because even though inventory is up on a year over year basis and is at the highest levels since 2020, it's still, inventory is still low on a historical basis. We don't have that many homes for sale compared to pre-pandemic levels across the country. So, and we're certainly nowhere near 2007 levels of inventory, which caused home prices to crash basically everywhere across the United States. So I think right now, this is the crash. If you've been waiting for the crash and you want to purchase a property, right now is the time to do it. I think it's the best time to do it. And I think if you wait for rates to drop or prices to drop, you're likely going to find that rates will be the thing that drops before prices. And that will cause home prices to increase. It'll cause more competition in the housing market, which will make things more difficult for you as a home buyer out there. Again, I'm somebody who puts my money where my mouth is. I just bought a property this June in Vermont, and I personally think that now is the time to buy, because once rates drop, we're going to see prices shoot back up like we saw in 2021, 2022. It might not be that drastic, but it's not going to be as favorable of a market for buyers as it is right now. So thank you so much for watching. I hope you got something out of this video. Leave me a comment. Let me know what you think, and I'll see you in the next one.